today, Atyab Tahir, who is the country manager for Mastercard. And today, Atyab and I are going to get into a deep dive conversation into Fintech. Atyab, just a little intro about Atyab, although I think a lot of people already know him. He has nearly 20 years of growth hacking experience, building new business models to achieve scale and profitability. He's a cross-cultural leader with diverse experiences in life. Prior to taking on the helm at Mastercard in January this year, Atyab spent nearly 4 years at HBL as head of digital and 4 years at Telnor Microfinance Bank, first as chief strategy officer and then as chief risk officer. Hello, Atyab. Glad to have you here. How are you doing?
How is everyone? Good. You know, it's interesting times. Most days I'm just trying to keep my head above water.
I think that goes for most of us. So Fintech is such an interesting field, and I'm really excited to be talking to you about it because I know how excited you have been about this area. But first, before we get into, the nitty-gritty, can we first define what Fintech is? What does it encompass? So there was a time when anybody said Fintech, we thought only of PayPal. And then came along Venmo, Stripe, Apple Pay, Alipay, and all those apps. Now, Fintech appears to include all sorts of things like crowdfunding platforms, budgeting apps, stock trading apps, insurance apps, robo-advising apps, and God knows what else. What's your take on what Fintech actually is?
All right. So my definition of Fintech is slightly broader.
Okay.
And I feel that any business in today's day and age has elements of being a fintech, whether it is an education platform or an e-health platform or any other service that we're providing digitally, because that service would have to eventually end up in a transaction. There are elements of being a fintech involved in building new businesses. So if a startup comes to me and they're like, oh, we are just an e-commerce company, we're not a fintech, I would suggest that they are perhaps not looking at the entire picture, because a very big part of e-commerce is getting money from one end to another end. So goods can go from one end to another end. So whenever money is involved in whatever form of business, in whatever business model, that, in my opinion, qualifies as a fintech. Specifically for us, it is payments, transactions, financial data, processing of that financial data, insights like investment houses and robo-advisories. We have a very good one coming out of Nest.io, which was Investors Lounge. So the realm of fintech continues to expand, and it just isn't one thing or another. Blockchain companies have a very strong fintech element. AI companies have a very strong fintech element. E-commerce companies now have a very strong fintech element. If they're going into financing and whatnot, they have an even stronger fintech element to their business.
Okay, makes sense. So who do you think are the users of fintech?
Everyone.
Well, everyone's not using it yet, right? But who are the majority of users who are sort of taking on to fintech? And I'm not talking yet about Pakistan, we'll get into that. But globally, who are the people who are actually using fintech?
So broadly, there are two categories of fintech users. You have businesses and you have consumers. And in the consumer space, we've gotten a lot of play when it comes to the Revoluts of the world or the Monzos of the world, or Apple Pay, Samsung Pay. These are all good examples of consumer-oriented fintechs.
Okay.
And then you've got business-oriented fintechs, which are providing back-end support and back-end functionality to banks. For example, my current employer, Mastercard, is absolutely a fintech. It is not a payment scheme, as some would say. It is a payment technology company with very strong elements of now artificial intelligence built into cyber threat intelligence. We're working on blockchain. We're working on open banking. There are, in the business space, primarily the users of fintech are banks, EMIs, payment service operators and payment service providers. In the consumer space, you've got mostly young people who have adopted the idea of using digital financial services rather than conventional financial services. And then you've got these late stage adopters who are middle-aged people like myself. And then as a result of COVID, now what we're seeing is that the non-conventional fintech user is also moving towards utilization of digital financial services. My father, who till 3 months ago would either send a driver or go himself to the bank to pay his utility bills, today is an avid user of bill payment solutions provided by one of my former employers. And he raves about it. And every time he makes a payment, he sends me a screenshot of a successful payment. So it's a very exciting time. These are challenging times, of course, and I don't want to trivialize the amount of hassle that the world is going through. But I do want to emphasize that it is an exciting time for new businesses to really emerge and start developing new forms of users. And we have seen in the last 3 months, especially, that conventional business models have been challenged and conventional customers have adopted new ways of doing business.
Right. And of course, startups are great users of fintech.
Absolutely. Absolutely.
Okay, so now some of the largest investments globally appear to be in the fintech space, with many unicorns emerging in 2018, 2019, and now we see a lot of mergers and acquisitions beginning to happen, with Intuit buying Credit Karma, Visa buying Plaid. What do you see as the advantage of these mergers? Why do you think there are so many mergers and acquisitions taking place in this space?
Part of it is consolidation of services, right?
Okay.
Where certain giants saw these emerging fintechs that have done really well and have shown exponential growth and a quick path to scalability. And they feel that rather than developing their own expertise in that area, it's better to go and acquire expertise. And a lot of the startups, and there's nothing wrong, absolutely. In fact, one of the key principles of entrepreneurship is that build a business that others want to buy.
Of course.
And being able to build a business that becomes successful enough that you capture the imagination of large payment companies around the world, or you capture the imagination of data companies or banks, right? Big banks now have huge amounts of money at their disposal that they want to put towards venture capital, especially in the fintech space, because they don't have time or energy or the money to waste on building these capabilities on their own. And the reason
maybe not even the thought process, because they're not used to thinking this way, right?
Absolutely. And I think that's the most important element. A lot of senior executives in banking understand the importance of going digital, but they just don't know how to get there. So for us to be able to create businesses that can bridge that how gap for them and help them achieve the why makes fintechs a prime target for acquisition, and sometimes very lucrative acquisition. Some of the most recent ones are in the tens of billions, if I'm not mistaken.
Yeah, absolutely. I think I read about one of them, which was bought for about $6 billion. And I said, wow, that's huge. Do you think it is also their attempt at capturing a new user, a new kind of user? Because fintech usually attracts a lot of young people, and young people are normally not really attracted by the typical conservative banking system or payment system. And so that might be one way of capturing this new user base.
Absolutely. Look, we've been hearing about how important the millennial generation is, right? And surprisingly, our definition of millennials is sometimes flawed, because we think that millennials sort of are between that 18 to 24-year-old bracket. Now that definition itself is at least a decade old. So people who were 24 a decade ago are now in their mid-30s, and whereas the definition is still stuck there. So a lot of the older millennials also were not big fans of conventional forms of doing anything. And now they are at a point where they're affluent. A big majority of these older age millennials they tend to be doing well. So people who are in their mid-30s now are just out of that aspect of living with their parents. They're buying homes, buying cars, and they're not doing it all on cash. They're doing it through financing. And banks, they had great relationships with parents and grandparents of these millennials, but somehow forgot that they had to continue building this relationship, something they could have learned from the tobacco industry, perhaps. That's a joke. But look, and fintechs came in and then bridged that gap. They were able to attract new customers who didn't have a lot of money back then. That's why they weren't really attractive to banks. But now they're starting to come into money, slowly but surely. And then you've got this interesting phenomenon happening where baby boomers aren't really retiring, right? They still have money that they have lent to banks to lend out to other customers at a very low cost of funds. So banks never really had to go and search for customers. Customers just came to them. Whereas young customers said, look, banks, stay away from us. We will choose the lending clubs of the world and the Revoluts of the world and the Atoms of the world to give our business to, because they understand us better. This is definitely an attempt from banks to expand their customer base. It is also an attempt from banks to understand the new customer base that they have through the lens of the fintechs who've been dealing with them and who understand the needs of the customers better than banks currently do.
This is what I was going to come to. That, it's okay. Banks also have a lot of data. So the initial thinking was that, by acquiring these fintechs, they're going to get access to so much data. But it's not that they lack data. They have a lot of customer data that they could use, except they don't use it the way it should be used, right? They just use it traditionally, buy a car or buy a piece of land, but they would not think beyond that. Whereas these youngsters that they are acquiring as part of the setup have new ways of using that data. And I think that is a great advantage. What do you say?
Yeah, and look, data is data, right? It is the insights that you derive from that data that help you become unique in many ways. And a lot of fintechs, especially fintechs working in the credit space, have moved away from using conventional data. So take Pakistan as an example. 20% of the population is banked. So banks have transaction data on them, banks have demographic data on them, whereas 80% of the population is unbanked. However, nearly 50% of the population in this country has mobile SIMs. And they're providing much richer data. So I know there's a fintech in Pakistan. I have a lot of respect for them. CreditFix. CreditFix was, I think it's the first fintech in Pakistan to be able to use data in unconventional ways. There is another one, Love for Data. They are doing tremendous work with looking at somewhere around 800 different data elements that they can incorporate. Another one is Taze. So all of these are now providing banks services, or trying to provide bank services. They're long sales cycles now, where they can actually use non-conventional data to lend out to new customers, especially when the amount is very small. If the amount is 1,000 rupees or 1,500 rupees, the cost of doing a credit assessment at a bank would be much higher than, say, a fintech if they were to run data coming from the device, or certain basic elements that are just provided from social media elements, and taking that data and understanding how this person would be able to pay the money back. It's much cheaper, much more effective, and it gives a quicker road to scalability.
Okay, so that takes me to the next question. So there has been a lot of optimism and a lot of talk about the potential of fintech in Pakistan for several years now, with banks, with startups. Everybody's sort of talking about, yes, fintech's going to be hot. What are your thoughts on the state of fintech in the country at the moment?
I think it's nascent because the opportunity is not being fully understood by entrepreneurs. There were some early attempts, and what we have done is largely focus, as fintechs, largely focus on individual consumers and the customer. The customer isn't really just the individual consumer. There's a huge opportunity in the B2B space, in the SME space, which is being left on the table by fintechs. If certain companies can come in and start optimizing B2B services, B2B financial solutions, you would see those fintechs grow rather quickly. It's a $263 billion opportunity according to World Bank estimates. More than 90% of transactions in the B2B and SME space is done in cash or on perpetual credit, right? So this is credit that is transferred from one entity to another. It's never really fully documented. And the challenge banks had was they never really understood the SME space. They only looked at SMEs from a lending lens, whereas SMEs and small businesses require to be looked at from a business facilitation lens. How do we ensure cash flow? How do we ensure that inventory is there on time? How do we ensure that people are paid on time? How do we make sure that there's a delineation between an entrepreneur's kitchen management fund and their business cash flow? And these are all services where financial services could be embedded and offered to the SME. Once entrepreneurs realize this space, and once they start to work towards the space, you would see a lot of growth in the fintech market. And then a huge reliance on data, right? We still have a lot of fintechs which feel that data is not really a necessity, and it's just data is data, right? So they would get, when they get access to data, they'll figure out what to do with it. I think it's very important for fintechs to realize data analysis, data intelligence, and getting insights from that data to continue to have their business model evolve is an integral part of their business model. It can't be an afterthought.
And so you think that will help accelerate the process or bring about a lot more fintech players into the market?
Yeah, I see a lot of data players that are in the market would want to pivot to becoming fintech players. I just gave you two examples of LFD. LFD started out as a data analytics company, and they're now starting to pivot to providing financial solutions for banks. Similarly, Credit Fix, I believe, is a data company, and Awais and Aisha, if I'm misspeaking, please let me know. But they're primarily a data company, and they're building business models around data analytics, which are specifically in the financial services space.
Okay, so now there's digital acceleration happening, and a lot of it has been brought about by COVID-19. Do you see any downside to that, to the digital acceleration and at the speed at which it's happening?
So I'll give you an example, and it doesn't really have to do with COVID, right?
Okay.
If people were to look at me now, they would probably think that it's a fictional story, but it's true. Between November of 2014 and April of 2015, I embarked on a journey of weight loss, and I lost 17 kgs. 12 of those kgs were lost between November and March. And then for the last month, I went to a boot camp and I lost 5 kgs in the boot camp. The 5 kgs that I lost in the boot camp, I gained that back almost immediately as the boot camp ended. The 12 kgs that I lost over a slightly longer period of time, I gained that back over similar time frame. So it took me about a year or so to gain that back because my body was searching for that equilibrium. Same is the case with quick adoption of any phenomenon, right? There would be quick adoption, but you would see this big drop. As soon as things start to turn to normal, you would find that majority of people who are now doing digital transactions would probably revert to doing transactions the way they used to. There are certain behavior changing use cases that need to be introduced. Some have already been introduced, and some I know a lot of banks and financial services institutions are working on. Once they introduce these use cases and once we're able to change behavior consistently over a period of time, we would find that digital transformation would be there to last. So if I talk about the consumer space, utility bill payments, digitization of utility bill payments is definitely one of those things that will change behavior. I do not expect people to stand in line and pay their utility bills. Those who have tried online utility bill payment, they're converts, and they're not only they're converts, they're also preachers of the service. Mobile top-up and airtime top-up, I think digitization of that is going to move a lot of traffic away from retail shops to apps of telco companies and banking apps that provide mobile top-up solutions. School fee payments. Digitization of school fee payments is going to be a behavior-changing use case. Groceries and pharmacies, again, digitization of payments there is going to be behavior-changing. Anything that we do in the B2B space for introducing digital financial services, we would see that as behavior-changing. A lot of the panic buying that is happening, a lot of I expect the e-commerce transactions to actually take a hit post-COVID if we do not sustain the momentum by continuing to entice and engage people in repeating transactions that they've done on e-commerce.
Okay, now let's move on to your employer, Mastercard. What role are you playing other than the digital wave that you're riding in Pakistan? Is there something specific that Mastercard is doing? Maybe to ensure behavioral change, maybe to bring about collaboration, anything that's, that you feel is important?
So I've got 3 focal points for Mastercard in Pakistan. One is to grow and sustain e-commerce, right? And that is why we are now partnering with banks. We are already partnered with multiple banks to promote the internet payment gateway, and then work with merchants to accept e-commerce payments. As we all know, majority of the payments today are done on cash, on delivery. The biggest e-commerce player in the country, they still do nearly 75% of their transactions in cash, despite the wonderful discounts that banks are offering. Food Panda, again, is a great partner of ours, a very close partner of ours, and we have currently a campaign going, which is pan banks. There are multiple banks engaged in the campaign, and there are wonderful discounts being offered. Cheetah is another one where we are doing QR on app, and working with these e-commerce players would help us drive behavior change in the e-commerce space. The other big area for us in the coming year and for most of next year is going to be enabling contactless in Pakistan, where we already have a big chunk of cards that are in the market that are contactless enabled. And now we are working with acquirers to build acceptance points so that we go from having under 1,000 acceptance points in the country for contactless payments to multiple thousands of contactless payments. I do believe that the regulator also has a focus on creating more digital acceptance and non-cash acceptance around the country, and they have given, they're working with banks to actually to promote that. And as banks continue to expand the acquisition space, the acquiring space for payments, I believe that this is the right time to populate the market with contactless payment solutions like tap and go machines. Any phone, any smartphone can actually be converted into a POS machine. That technology exists. We are the forerunners of that technology. Being able to use tap and pay, you don't have to have a $300 device anymore. You can actually have a $70 smartphone and a free SDK that you can download from Mastercard to convert that machine into a contactless device. So we are working with our partners to bring contactless in the market. A big part of contactless is also introducing virtual cards, where you have an account or a card which is in a physical form, and that card you would not be able to use through contactless, so it's a standard debit card. By offering a virtual card solution, we can actually help you create a virtual card that can either be used on an MPOS, or it can be used for e-commerce transactions. And we are working with different banks to bring virtual cards to the market, and that's part of our contactless enablement strategy. And the third important area for us in the growth of digital space is education of our banking partners and our financial services institutions like EMIs and PSO PSPs. Our aim is to work with all of them to enhance their digital capabilities. The wheel doesn't have to be reinvented. Some of the banks, some of the leading banks in the country have already begun their digital journey, and they've been on that digital journey for a while. I was lucky enough to be part of that digital journey at HBL. But some of the tier 2, tier 3 banks are still struggling with the definition of digital. And what we are offering is to be able to come in and help them not only define digital, but also execute digital. And I think in doing so, we would be enabling the ecosystem where fintechs would find a lot of areas to collaborate with conventional banks. And rather than having this debate of fintech versus banks, it is going to be fintechs and banks working together to grow the digital ecosystem.
Now, what are your suggestions for startups? Since we I think a lot of our participants would be startups. Looking at creating solutions in the fintech space, are there any suggestions you have? And is Mastercard collaborating with startups to bring about financial inclusion?
Absolutely. So globally, we have multiple programs where we collaborate with startups. There's a program called StartPath, which enables startups to offer their services to our banking partners and other partners. We are looking at the possibility of somehow bringing this program to Pakistan so that startups could benefit from that. We are also looking at solutions that we can offer to startups, especially EMIs. Recently, you would have heard about the collaboration between Mastercard and SadaPay. SadaPay is an exciting partner for us because they are doing something which would be a game changer in Pakistan. That is offering services to freelancers for financial solutions. Partnering with SadaPay, we believe that it's going to give us the right kind of exposure to the freelance space. And the debate that we've been having in this country for the last few years, where people say, oh, without PayPal, we can't really do anything. I think SadaPay bridges that gap. And inshallah, when they're successful, I see that this debate disappearing. I see them actually becoming a powerhouse to be able to offer a variety of solutions that they would be able to bring to market to change the space. Having said that, the freelancer space is huge. So any services that you bring to the freelancer space as a startup, I think has tremendous potential. As I said, B2B has tremendous potential in Pakistan. The other big area where I feel startups could really do well is to look at the chinks in the armor for banks and help them define what digital is. Because across the board, if you talk to any senior executive at banks, they would say, yes, we understand the importance of digital. However, help us figure out what digital means for us. And that just requires, knocking on doors and, bearing with a long sales cycle, which has gotten even longer now because of COVID-19. And if your focus is to sell to banks, make sure that your cash flow is tied up somehow, because a lot of that cash flow that you're expecting in 6 months from a bank deal may actually now be delayed to 12 months or 18 months. And generally, banks take a longer time to buy from unproven markets. We faced a situation pre-COVID, absolutely, with one of the startups, again, a Nest.io startup, Wukla, where they were able to do a proof of concept at HBL, and then going from proof of concept to actual deployment. We did the proof of concept in 2017, and when I left at the end of 2019, they were still looking to convert from that proof of concept to actually doing something long-term with HBL. And that's not a dig on HBL at all. It's just that banks, because they have a fiduciary responsibility to protect the money that they have from their customers, they want to be absolutely sure that they're not taking any chances to put that money at risk. And that's why they go through a very long and very comprehensive vetting process. So if you're a startup looking to sell to banks, make sure that you have cash flow tied up, make sure that you have alternate sources of that cash flow, so that when that money comes in, you can pay off your debtors and your creditors, and you can then continue to do business as usual. Jahan, you're muted.
How did I get muted? Don't know how that happened. Sorry. Okay, so do you think we as a country are making meaningful progress towards financial inclusion? And are there any interesting solutions addressing this problem? So you mentioned Credit Fix, Love for Data, and now Sada Pay. Are there any more interesting solutions that are addressing this problem? Because financial inclusion still is a problem for the larger.
Yeah, go ahead. Sorry.
For the larger number of Pakistanis in this country, I mean, we're a country of 220 million people, and you say 20 million are banked. There's a huge population that isn't.
Yeah, 20% of banks, around nearly 50 million. Yeah, 50 million people are banked, but out of those 50 million, there are some that are underbanked. So they only use the bank account to get the money in.
Yeah.
Go to the ATM once a month, take all of that cash out, and do all of their transactions in cash. There's a very small population that is truly banked because they're using multiple services from a bank. We do have a big gap in financial inclusion, I agree.
But is it getting better? That's what I'm worried about. Are people working towards, solutions that will make this go away?
So when I came to Pakistan, I think the number was around 13%.
Okay.
Right. So
which was how many years ago?
It was between 13 and 15%. That was 8 years ago, right?
Okay.
So in 8 years, we've moved the needle so that we no longer have that small double-digit number. It's a nearly quarter of the population that is banked, largely due to our telco-owned banks. Big shout out to both Telenor and JazzCash for making an effort to bring people into the banking fold. A
Absolutely.
big shout out to banks like HBL that jumped in headfirst when the country called for the largest cash disbursement in the history of Pakistan and took on the SARS program. And they're all my friends. I know them personally. Being able to go and disperse such a large chunk of money in such a short period of time means that the rails are there to increase financial inclusion. We have to realize, though, financial inclusion is just a means to an end. Financial inclusion means that you are providing access. If you have access to financial services, you have access to education, you have access to health, you have access to energy, you have access to sustenance, you have access to societal acceptability. So financial inclusion is closely tied to the reasons for which people are financially excluded.
Right.
And if we continue to address those reasons, we will expand the financial inclusion, the space which includes more people and that who have access to financial services. So, and the names that I've mentioned, these are entities that have worked and continue to work on use cases that matter the most to the marginalized. Microfinance banks and microfinance institutions have done a great job in educating the bottom of the pyramid on what it means to be credit responsible, right? Because for the longest time, microfinance banks were at 1 or 2% default rate. They've taken a hit recently because of COVID and because of some other reasons that happened in the microfinance space. But now that bottom of the pyramid is ready to be graduated to conventional financial services and ready to get access to conventional financial services, albeit through non-conventional means. Wallets, telco-owned banks provide those financial services through their mobile accounts, not necessarily through branches. I expect that and as financial inclusion is very close to what Mastercard does, I expect to work very closely with entities working in this space to now, as a next step, move away from cash and to introduce non-cash transactions. So a cash disbursement could be made better if it's a disbursement right into a wallet or right into a virtual card, or worst case scenario, right into a plastic. Given the environmental concerns, I wouldn't say that plastic would be the primary means to do transactions in the future, but for the foreseeable future, it will be a formidable way of doing transactions. But I do expect people to move away from cash and move digital, and giving people the opportunity to not just take cash out once a month or once when it's dispersed, but to continue to use non-cash means to transact at multiple locations.
Okay, so especially over the past few years, we've seen a number of fintech players emerge, but none of them have been able to attract a significant number of users to their platforms. Why do you think that is? Because some of them have been really good organizations and the founders are extremely competent, but the number of users they've been able to attract and retain, it's not just attract, because some of them attract users if it's connected with an event or something, and users just download the app, use it, and then after that, it's forgotten. Why do you think that it is? Are they targeting the wrong people? Is it that, is it people like me who may not be wanting or needing this form of service? What is it that is keeping the majority of people from Pakistan not adopting these fintechs?
Well,
wallets. Yeah.
One is education, right?
Okay.
So being able to create a narrative where people see transacting from this device as a necessity rather than just a means of redeeming a discount.
Okay.
Right? So we have to educate people that this is the future, this is the right way of going forward. The other thing is creating the right use cases. what I saw when I was in banking and now in the payment space, I continue to see that as well, that we tie use of digital payments to redemptions, to getting discounts. And those two at quick service, fast food restaurants. Now, majority of the population in Pakistan doesn't really go and eat at fast food restaurants. It's only people who are slightly well-to-do or who are comfortable who would go to a fast food restaurant and would even bother to have that, to use that discount. Whereas creating the right use cases, mobile top-up is the right use case. And I think I'm so encouraged to see all telcos now pushing digital payments on mobile top-up, to do mobile top-up as a means of doing digital transactions. Grocery, pharmacy, education payments, utility bill payments, those are all the right use cases. So if we provide the right use cases, we would see people flock to digital payments and then stay there. If we provide the wrong use cases, then we would continue to have this jumping in, jumping out problem. The industry has realized that, and the industry is now working on that. That doesn't mean the discounts are going to go away.
That's just part of it. Yeah.
Yeah. It just means that we need to educate people on the benefits of digital transactions. And the third thing is patience. In a country of 220 million people, it takes a while to build the market, right? Unless you have this completely revolutionary idea, it takes a while to build a market. We just need to make sure that everyone in the ecosystem is doing their part to help build that market. We have a role to play. Our competitors have a role to play. The regulator has a role to play, and they're doing a brilliant job, by the way. PSOs, PSPs, EMIs have a role to play. Banks, retailers, consumers, they all have a role to play. And if we offer the right use cases, if we offer the right education, and we provide it to the different ecosystem players to adapt that, we would find that they would do their part to build this market. I expect Pakistan to be turning the digital corner on financial transactions, I would say, in the next 24 to 48 months.
Good to know. Okay, I'm going to look at the questions now because some questions have come in. There's one from Hamad Alam, which I think you've partly addressed already. He says, as per my experience, educating the end user is the biggest missing piece. Are you aware of anyone working on this piece of educating the user?
Educating as in just
creating awareness regarding why, presenting use cases, stuff like that, because a lot of these people are not aware of how, other than the discounts, as you said, of what advantage there is to digital payments.
Yeah. So this is one of the things that now we are starting to work very closely with the banks and telco banks on. We expect that a lot of the marketing money that we put on the table is going to go towards educating. You have recently heard that Wasim Akram is now a brand ambassador. He has mass appeal, and we'll work with Wasim Bhai to make sure that the masses see their idol, their role model, using digital transactions in a way that is not only beneficial to him, but could be beneficial to the masses as well. And that's one of the ways of educating and creating awareness, is through our idols and through our role models, which we hope to
make sure there's women role models as well, because otherwise it'll be seen as a male thing.
Yeah. So we are working on that, and we will definitely have gender representation so that it's equitable and it invites all.
Right. Okay, now this is a long question, so I'm going to read this. It's from Usman. He says, we are currently carrying out a feasibility study into the launch of an Islamic neobank service, with the largest audience being Pakistanis. To me, fintech's greatest social advantage has always been financial inclusion, and as such, we are aiming to penetrate the unbanked market in Pakistan. However, we are struggling, especially within Pakistan, in building relationships with the right partners. We aim to issue cards to our customers. However, a task which is easily achieved in other parts of the world has proven very difficult in Pakistan. We're really struggling in trying to find a card issuing partner. Additionally, the route to building relationships with partners such as Mastercard is undefined. Is there any advice on how to build these relationships in Pakistan? Essentially, how do we find the right people in Pakistan so that we can move forward? And that is the question.
Osman, first of all, I'm legally bound to not do any consulting. Otherwise, I would have offered my services. This sounds like a great opportunity. I believe that for Islamic financial services, the area that you want to look at is low-cost private schools. We did, when I was doing my fellowship at Harvard, we did work on low-cost private school financial services in Pakistan, where we found that it was an untapped opportunity. So we offered revenue contingent loans to these low-cost private schools that are primarily in Punjab and Sindh, and have somewhere between 70 and 100,000 low-cost private schools, and they have somewhere between 6 to 8 million students. And each of these students pays somewhere between 50 to 400 rupees in school fees. So you can just do the math on the opportunity. These schools need access to financial services, and they have right there in the school, they have people who are also financially excluded. So being able to work with them and being able to provide revenue contingent financial services is essentially what Sharia compliant financial services are. You would find that you would get a lot of traction. Do reach out to me privately. I am on LinkedIn. I'm happy to offer you any advice free of charge, because I believe this is a great opportunity.
Okay, the next question is, how do we build a relationship with Mastercard in Pakistan to better enable our fintech service?
Reach out. Let's figure out a way.
Yeah, Atyab is on LinkedIn and he's very responsive. So reach out to him. Use LinkedIn. Okay, and Osama Faiz wants to know, how long will it take SadaPay to substitute PayPal?
That's a very good question for my pal Brandon Tyminski and Umar Salimullah. Sooner than later, I hope.
Okay. And then there's an anonymous attendee who says, sir, don't you think our banking security mechanisms are not as worldly standards and due to which banks have been breached? I think he means the security standards.
Yeah. So cyber intelligence and cyber threat are the two biggest areas for growth for fintechs. We are lucky to have a world-class cyber threat and intelligence solution that we were able to offer banks right after the incident happened 2 years ago. And we were able to create an environment where banks were able to protect, especially their card customers. We're still not there. As Pakistan, we are still not there. One of my gurus says that we are one big event away from financial catastrophe in the country. I tend to agree with that. We need to be vigilant. The state bank has put out some very enabling regulations around this as well. And we need to do more. We need to bring in, there is tremendous opportunity in this space for fintechs to build solutions. And a big part of cyber threat intelligence is knowing your customer. And a low-hanging fruit for fintechs and startups in the country is to be able to come up with eKYC solutions. There are some that are in the works, but this is one of those opportunities. It's just right there to be reached and plucked out.
Okay, Asan Jabbar says getting endorsements via influencers on the millennials is a huge opportunity. What do you say?
Agreed. And we saw that when we ran the Food Panda campaign recently with Food Panda. Food Panda was able to bring in 30 odd influencers who were posting on their behalf and talking about the discounts. It's a great campaign. We're seeing a lot of positive results, and I absolutely agree. Guerrilla marketing is the way to go. Influencers, bloggers, TikTokers. That's the way to market your product. There's a guy in Faisalabad with 1.7 million users. We're trying to figure out how to engage him. If there's a startup out there that wants to, build a service around that, they can capitalize on it. If they can bring me 100 influencers who can post on my behalf, or to banks or any of the big companies, I think there's a market for that. So be an influencer aggregator.
Danish Hashmi says, what is your advice to banks?
The way it's spelled, I can tell you it's my good friend Danny from Canada. Big shout out to him. He's a tremendous person, and throughout my life, he has helped me become a better person. Danish, thank you for the question, and I hope you're staying safe. My advice to banks is to focus on the basics. Keep your customer in mind, keep your customer in focus, and understand what their needs are. Build services and products around the needs that the customers express. Improve the processes, the back-end processes. You can't be digital if you have an app and then an army of people doing manual processes in the back end. Focus on experiences, not products. Focus on insights, not data aggregation. And focus on retaining the right talent. If majority of the man-com or ex-com at a bank is not from your target audience, from your target set of customers, then you need to bring in advisors from that age group, from that demographic group, from that target audience, to be able to educate them on what the customers want. As I said before, I find bank and banking executives to be willing. We just need to extend our hand and make sure that we are there to help them understand their customers better.
Mohammad Taha wants to know, well, first he wants to thank you for briefing fintech from very scratch. We're all aware of the bright side of the digital financial services. However, do you see any risks associated with them? Moreover, are we looking forward to making freelancing market more efficient with some better solutions?
Yeah, I think the greatest risk associated with digital financial services is identity, right? And right now there's a gap between your actual identity and how you interact with your digital financial services. There has to be a meeting point where your ability to access digital financial services is impenetrable unless it's absolutely you. And it's for that we have to work with identity companies and identity custodians. We have NADRA in our country that does that. And we have to work with the regulator to come up with a way where your digital identity is tied to your ability to use financial services. And I think we're not there yet. The other threat is obviously, your information being put out there on the dark web. And that's why cybersecurity and cyber threat intelligence is a very important aspect that banks need to focus on. The other question is, are we looking forward to making freelancing market more efficient with some better solutions? Yes. Again, we have to move away from looking at freelancers from a lending lens to actually a facilitation lens, and helping them. So especially for freelancers, coming up with ways where they can create, build their skills and continue to build their skills in a way that they continue to make more money from those skills. And maybe look at ways where their financial services provider also provides them a subscription service to Coursera or edX or whatever, to continue to build their skill set, I think would be a start.
Yeah. Hassan Murtaza is very curious whether Food Panda offers the deals that are offered on Food Panda on Mastercard. Who bears the discount amount, the bank or Mastercard? I don't know how that helps him because, well,
it depends. It depends on the engagement we have with the bank, and it depends on the engagement we have with with the Food Panda and other providers as well. And in the interest of time, I wouldn't be able to cover all of that.
Okay. So just a few final short questions. One is that, do you think that there are any policy changes that are required that could help ease the process of starting a fintech and scaling it in Pakistan? You're very impressed with what State Bank has already done, but is there anything SECP, State Bank, the government in general, are there things that need to be done that we could address?
So, SECP has now recently put out
a sandbox,
very facilitative onboarding regulation, which I'm very happy about. State Bank, yeah, sure, but I think there is one regulation that we have expected for a while that has not yet come, and I believe that people in State Bank are working on it, and that is the digital bank regulation. EMI is a great step forward, and we have now seen 6 EMIs take those licenses. 2 are already in the pilot approval stage. So that's very encouraging. I think what needs to happen is for us to look at models where we are not putting so much of a burden upfront on fintechs and startups, and maybe look at a pay-as-you-grow model where they can come in with a limited license, and then as they grow, they can continue to expand the license and its capabilities so that they can actually prepare their investors of how to bring in money and what stages would they need money to expand the business by getting this license.
So this is, I think, connected to the other question that I had was, do you think entrepreneurs should be well-funded if they're looking to compete in the fintech space?
Well, entrepreneurs should always try to be well-funded. That's right. But there are higher barriers to entry in the fintech space. And if you are an entrepreneur that is aspiring to become a fintechpreneur, make sure that it's not just an idea on the back of a tissue paper. It's a well thought out business plan with a proper exit and execution strategy so that you attract the right investors. A fintech investor would be more cautious, in my opinion, than other investors. It takes longer to bring these fintech investors on board. Once they're on board, they would open up the world to you. They would bring the resources that you need to be successful. We have seen that in Pakistan with at least 6 companies now, where they were either bringing their own funds as entrepreneurs from previous entrepreneurial ventures, or they were able to secure the right investment. It's very important to hold out for the right investment. If you're a fintechpreneur, don't just jump at the opportunity of taking money from any Tom, Dick, and Harry who would throw money at you for a big chunk of your business and then change your business model the way they want to do it. Hold out for the right investor. Hold out for an investor that understands the business model, who understands the regulatory space in Pakistan, who can actually get you connected to banks. Because in Pakistan, if you're a fintech, disrupting the banking model would not be as lucrative and as effective as trying to change the model by being a collaborator and by being a partner for banks.
Now, with we had a whole session on super apps last week. Will banks be able to build super apps, or will other companies like Careem and Baikia beat them to it?
I think the latest research is that the super app phenomenon is very 2018. Right?
Okay. So what will happen instead?
and you now have the same mobility companies coming up with multiple apps. So horses for courses, whether it's Uber for transportation, Uber Eats for food, and Uber events for tickets or whatever, or it's whether it's a bank like my previous employer that is actually trying to build a super app and doing a pretty damn good job at it, by the way. The latest rendition I was very happy with and very proud of my ex-colleagues as well. But the idea of a super app, in my opinion, is passé. And I find that app would just remain as a front. And latest research shows that people like hopping from app to app to do different things rather than doing all of the things in the same app. It's important to build the right rails. It's important to build the right connections. So what big mobility players like Careem and Uber and Lyft and big banks are going to try to do is build the right collaborations, become aggregators of services, and how they present those services to their customers perhaps is going to be different, because different services have different audiences. But it's more important than apps and more important than having a super app is being a super connector and being able to connect what people need to their need at the time they need it.
Yeah, especially with technology changing and user behavior changing at such a fast speed, you can't really. Okay, last question, and this I knew would come, is from Hamad Alam, who asked, do you think blockchain tech like Ripple coming to Pakistan in the fund transfer space, do you see it coming?
Well, first of all, Ripple is not blockchain.
I thought it's
yeah, it's a different technology. It is blockchain inspired. But yes, blockchain would be coming. Blockchain is a reality. Cryptocurrency is a different story.
Cryptocurrency is, I think, what he was thinking of.
Yeah, so cryptocurrencies, I think there's now a phenomenon where regulators are working on cryptocurrencies which are tied to the fiat currency. And I to be honest, this space is so vast that my last big interaction with this space was about 5 months ago, when I was looking at it full time. I know for a fact that large companies and large banks are working on perfecting blockchain technology. I expect trade and B2B services to be the first place where blockchain technology would disrupt payments.
Even healthcare, I would think. No?
Yeah, healthcare, definitely healthcare, yeah. And yeah, especially now with healthcare being in a stress situation, I think blockchain is a lot of solutions that can help healthcare.
Okay. Well, I know there are still questions coming in, but I think we are well past the time that Akash allotted us. So I'm going to say thank you. Atyab, that was really fun. I learned a lot. I'm sure our participants did as well. We're going to share this on various networks so that those people who were unable to join us benefit from our conversation. And maybe we'll talk again. There will be new things happening. Thanks for making the time, and take care of yourself. Stay safe.
Thank you for the opportunity. Stay safe and healthy, everyone. And we'll definitely, once COVID ends, we'll meet, inshallah.
Okay. Take care. Bye-bye.
Thank you, everyone.
Bye-bye, everybody.
Bye-bye.
Bye.